What?
Hello friends, this is PJ Crescenzo with Team Crescenzo, partnered with American Pacific Mortgage and unofficial sponsor of Celsius Energy Drinks. And on today's topic of Mindset Matters, we want to talk about appraisals, right? So again, fantastic team member and unprofessional but professional video man, Brody McGuire, said, hey, let's talk about appraisals. And I think that's a really important topic, right? Because when we were doing a presentation a few weeks back, a referral partner asked, what are the 3 things you need to close a loan? And really there's 3 things. Underwriting approval, which equals borrower documentation, title work from our preferred attorneys and our legal partners working on the real estate side of real estate law, right? We need the title work for the subject property. And number 3, we need the appraisal because it's the collateral. It lets us know how much that property is worth in exchange for the loan and the financing that we're putting up on that property. So there's 2 big things we look at on the lending side when an appraisal report comes back. The first one is this status that an appraiser is going to give a property, and it's whether the property is marked subject to, which means it's subject to completion, subject to certain repair items being addressed on the property and on the report, or if it comes back as is, which means there's no requirements that the appraiser is listing in order for this property to be approved by the appraiser and approved for financing. If a property comes back subject to, those items have to be addressed because as the lender, we need to go off of the appraiser's feedback for what things he's requiring to be addressed and met for the financing type. If it's as is, then we're good to go in terms of what the appraiser is requiring. But here's the second one, and this is where your lending partner can be extremely critical and crucial, and it's the value, right? So there's 3 different areas of how the value can come back on that appraisal report. Number 1, it can come back above value. That means you're buying a property and you're under contract for a certain price, and the appraisal can say that the property is actually worth more than what you're buying it for. We see this all the time in new construction. We see this sometimes when there's a really good deal negotiated in the pre-owned market. This is a home run for our buyers, right? The appraisal report comes back higher and above value for what you're buying it for. A cool thing here is when the appraisal value comes back above sales price of what you're under contract for, sometimes there's an opportunity to renegotiate with the seller and maybe build in some additional closing costs or get creative because you now are under contract at a certain sale price, but the asset that you're buying is worth more than what you're buying it for. So that's where your lending partner can really help you take advantage of this scenario. If the appraisal comes back at value, there's not really a whole lot to do other than reduce the anxiety levels a little bit because you're buying it for exactly what it's worth, right? So it's exactly what we thought it was, we keep it moving. But here's the big one. This is where who you're working with as a mortgage lender is a night and day. When an appraisal report comes back below value, you're now under contract to buy the property at a certain price, but the appraisal report is saying that the home, the collateral is worth less than what you're buying it for. So 2 things can happen at this point in the process. Number 1, it can reopen up negotiation between you and the seller. Hey, we said we wanted to buy it for $300,000, but the house is only worth $250,000. What are we gonna do, right? And sometimes there can be clauses in the original contract stating exactly what's gonna happen. Other times it might not be. There might just be an appraisal contingency and now, hey, we didn't meet it. We need to re-talk and figure out what we want to do. But this is what I want to key in on. Aside from the negotiations and the conversation between buyer and sellers, what options do we have as a mortgage lender to help our clients and help our referral partners overcome this hurdle if the appraisal came back below value? And this is a rough number we just ran. We got an amazing person in our office who orders all of our appraisals. And I said, hey, let's just do a quick scan on how much we saved and or gained back in value when appraisals came in below sale price and we submitted what's called a ROV, a revision of value, when we disputed that original appraisal report and requested that the appraiser go back out there and take another look. Since we've been partnered with American Pacific Mortgage, 7 months in 2022, we saved approximately $300,000 in appraised value by requesting this report and by working with our appraisers and working with our partners. I've seen so many times appraisal report comes back below value. Another lender says, oh, well, guess you got to bring the difference. In some scenarios, this is money that all of our buyers would have been bringing had we not submitted this request to go have the appraiser look at additional comps that might have not been taken into effect or taken into account, or simple mistakes and errors on the original report. We love appraisers. We love appraisals because that's our collateral. It's an extremely important part of the process, but they're human beings, right? So sometimes they might have not had all of the information. There might have been things that weren't included in that report. So that's where, as a team between us and our referral partner, our realtors, our builders, and working with our appraisers, this is the number that we save. So when everything's going good, it doesn't matter as much as who you work with, right? Other than the experience and getting a good deal. But when problems arise, or speed bumps occur, or your engine breaks down, then the mechanic that's sitting in the back seat matters that much more. So I just want to key in on this. Again, talk about appraisals, right? Subject to as is, value, above, at, below. What can we do when it comes in below value? We can submit a request of revision of value, right? We want to go out and have the appraiser take another look. This is what we saved in 7 months on appraisal values. And how can we do that? Hey, was there any comps we missed, or were there any mistakes and errors in the original report that we need to address? Any questions, Team C at apmortgage.com. We're here to be a resource on anything we can do on the mortgage lending side. We hope you have a blessed day, blessed week, and let's go Team C.